Well, let's turn back to the markets and this pick for the Governor Board opening. Let's bring in Charles Schwab, Senior Investment Strategist Kevin Gordon, and G Squared Private Wealth CIO and CNBC contributor Victoria Green. Great to have you both here on what was a reversal of a day for the major averages. Kevin, I'm going to kick this off with you because I know you make the case that the Fed doesn't actually need to cut here, but I do wonder what a beginning of a shift to the Fed composition is going to mean for that outlook, not just this year, but through next.
Yeah, well, I think as it stands now, and maybe pre-jobs report, it wasn't as much the case. You could start to put together the argument that they could definitely, cut in September, assuming you have what we saw for July jobs, and that continues with pretty significant revisions to the downside and also probably more of a softening in hiring. So I think that if that were to continue to be the case and you didn't get some significant surge in inflation, not just in the goods component, but what is broadly CPI or broadly PCE, probably sets them up for a little bit of a cut. Because Powell, noted in the most recent press conference, it's not as if they're not looking at any downside risk to the labor market. They still do view that as the case. So I think that'll continue to be, sort of the driver's seat force in terms of driving Fed policy and also driving the equity market. I think the one thing to keep in mind, though, is just because we got a really soft print for July and there were those significant revisions down, to the downside, and John Williamson of the New York Fed has been, I'd say, probably out front in terms of leading this thought out there, where you do have a little bit of a catch down, race to the bottom for supply, but also demand for labor. So it's not just the case that because you see a significant slowdown in job creation each month, that doesn't necessarily mean it's this ultimate bearish case for the economy, because we do have a pretty significant contraction that we're seeing in the labor force. So it just means that the run rate for payroll growth can be a little bit lower without seeing the unemployment rate tick higher significantly, but it also doesn't dismiss the idea or the notion that we have started to see a lot more softening in labor for sure.
Yeah, it's a key point. Brian Moynihan made it on our air earlier this week, this idea that the supply side is coming down as you see foreign-born workers come out of the economy here. Victoria, I want to get your thoughts on markets here on a day where you do have the S&P and the Dow both taking a pause. The Nasdaq, though, eking out a gain, which I think speaks to the ongoing dominance of big tech.
Yeah, I still think big tech is the place to be. Obviously, software took a little bit of a hit today, led by Salesforce a little bit lower there. I think people are kind of trying to figure out how protected is everybody's moat as AI continues to make leaps and bounds forward. Are some of these software as a service companies really going to be able to grow sales? And they're going to have to come through with it. They're going to have to say, hey, these AI add-ons are actually worth it. They're going to have to show revenue growth. They're going to need to show growth in their user base. And they're going to have to show their moat that, hey, so OpenAI and ChatGPT, they're not going to eat our lunch and we can continue to grow our profits. I generally think all in, tech is a wonderful place to be still. I still like my Mag 7. I don't think this is the end of the world. I think you could see, winners and losers are becoming a little bit more apparent. So as the chips were winning a little bit because there seemed to be a lot of exemptions to the 100% tariff, at the same point, then you saw software give it out on the other side. So I think you have to be extremely picky as an investor, know your company, and specifically understand your company's strengths, weaknesses, and moat against threats from AI.
Kevin, what do you see as attractive in this market here? I mean, where are the areas that you'd be thinking to invest? We just talked about some of these companies that are actually investing in the U.S., seeing exemptions, enjoying exemptions from tariffs. I have to think that's an area to at least investigate.
Yeah, it definitely comes down to having a little bit more of a idiosyncratic or stock picking mindset, because to approach this thematically or even from a sector basis, it's getting a little bit more difficult just because you do have a lot of exemptions being carved out, not just at this point now for sectors, but also for individual companies. But I think that if you've been approaching, and our sort of position has been the same on this and consistent for the past few years, really post-pandemic, looking at everything from a factor or characteristic-based, viewpoint, not necessarily from a sector view. Because even if you look at what's leading this year and where leadership has started to become concentrated in the S&P 500, it's tech, it's utilities, it's industrial. So those three don't really necessarily fit into what is considered, one traditional category. You've got growth, classic defensive, classic cyclical, all represented in those three sectors, but they all happen to have, a little bit more of an AI theme or common thread there, but they also happen to have relatively solid fundamentals in terms of earnings growth and profit margins. So if you have that absorption power as a company or as an industry, then we think you can, handle the sort of coming in macro environment relatively well, because we know we're staying in a relatively elevated tariff rate environment. We know we're probably going to stay in an environment of more, contraction in the labor force and a little bit more downward pressure on supply. So all of that together leaves you with those characteristics and those factors that tend to be up in quality, specifically, though, when it comes to margins. This is much more of a margin story than anything.